Hi everyone, I'm Miles. Today we'll discuss shareholders' equity, the final and often misunderstood part of the balance sheet. Many see equity as just a residual. Technically true, but it's not just a filler. It records capital, risk, and trust. Shareholders' equity answers one key question: where did the money come from? What had happened over the years? It has three parts: contributed capital, retained earnings, and unrealized changes. Next, let's work through some problems to see how it's actually done. Problem 1. Contributed capital, par value, and additional paid-in capital, or APIC. Stock par value is a symbolic legal minimum required to protect creditors. But additional paid-in capital, APIC, reflects the investor's actual economic contribution. By setting par value near zero, companies avoid the legal risk of issuing watered stock below the minimum, while APIC accurately records the full market value received. For example, Company A issues 10,000 shares, par value 0.01, issue price 8. Calculate cash received. 10,000 times 8 equals 80,000. Record par value 10,000 times 0.01 equals 100. APIC is 79,900. Journal entry: debit cash 80,000, credit common stock par 100, credit APIC common stock 79,900. The key is that par value is the legal floor. A PIC is the economic reality. Problem 2. AOCI, real but unrealized income. For instance, Company A holds an available for sale security, or AFS security. Cost is 50,000, year-end value 54,000, unrealized gain 4,000. Entry: debit AFS investment 4,000, credit accumulated other comprehensive income, AOCI 4,000. It's not on the income statement because it's a value change, not an operating result. Problem 3. RSU. Restricted stock units involve changes even without cash. An RSU is essentially a process of transferring value from retained earnings to APIC. As employees earn shares through service, the company recognizes compensation expense, reducing retained earnings while increasing APIC to reflect the capital contributed through labor. For example, Company A grants Jack 4,000 RSUs at $20 each, vesting over 4 years. Total 80,000, 20,000 per year. Year 1 entry: debit compensation expense 20,000, credit APIC restricted stock 20,000. Though there's no cash outflow, the expense reduces retained earnings, changing the ownership structure of equity. Finally, shareholders' equity isn't just a number, it's a history recorded in journal entries. It tells you where capital came from, how profits accumulated, why fluctuations wait, and how ownership silently shifts.